VimpelCom has reported its fourth quarter and full year 2014 financial results. What for you are the highlights?
One key highlight is of course the fact that we are delivering on our 2014 targets. We see revenues and EBITDA declining mid-single digit as expected. We see net debt to EBITDA coming in as expected, and we have been able to invest 20% of our revenues upgrading our networks to be able to provide high quality data services to our customers. That's for me an important milestone this year. Secondly, of course, we see challenging macro environments. We see geopolitical challenges in Russia, Ukraine. We see headwinds on FX, where our operating currencies are weakening to the dollar. And we see also generally lower growth rates in many of our markets. And you can see in today's release that we have also decided to do an impairment of approximately $1 billion. Of course, no cash effect, but still reflecting the underlying values of the assets that we owe in these different markets. There's been a number of achievements that is important for the company during the year as well. The big ones to me is the fact that we have signed and closed the transaction in Algeria. We have done and achieved a lot on the refinancing area. We have been in the market with approximately $21 billion of refinancing during 2014, which has given us a much better capital structure. Russia showing an improving trend during the year is important to me. That we have cleaned up our smaller assets and overall the portfolio has been important to me. I think also the fact that we have now successfully upgraded our networks with heavy investments, leading to more customer satisfaction, growth in our subscriber base is important. And overall, we see an improved trend during 2014. So I would say, all in all, I'm pleased with the progress on many areas, and I'm pleased with the trend in our operational performance.
You've undertaken a number of steps to improve VimpelCom's capital structure. Why did you do that, and how has it helped?
Well, our capital structure was not ideal. We had high leverage that led to high interest expenses. We had an unfriendly debt maturity profile generally. We had a not optimal currency mix of our debt. And at the same time, we also had a requirement to increase our investment in our networks to provide high quality services. So we decided early in the year that we wanted to address all these issues and find a way to improve the capital structure. You can group our actions in three. The first thing we did was, as most people probably remember, reducing our dividend payments. We did that to be able to invest in networks and of course also help deleveraging. The second part in our actions was a number of refinancing activities. We have been in the market refinancing approximately $21 billion during 2014. And the third basket is of course the closing of the transaction in Algeria that gave VimpelCom $3.8 billion of cash inflows. All these actions has helped strengthening the capital structure of the company. Today, we are fully financed. We have a strong cash position. We have no major refinancing needs until 2020, and we have a number of operating entities generating strong cash flows.
You successfully closed the Algeria transaction. What happens next?
I think we can start looking forward now in Algeria. We have a strong local partner. We have a strong brand. We are the largest mobile company in the country, and the focus now will be on investments and upgrading our 2 and 3G networks to be able to provide continued high quality services to our customers. Of course, also improved commercial offerings is an important part of this. We know this transition might take time, but the starting point is good.
Can you provide an update on Russia?
Russia has shown quarter-on-quarter improvements during 2014. I think the improvement is driven by the fact that we have been investing quite substantially in upgrading our networks. It started all the way back in the beginning of 2013 and continued during the whole 2014. And I think also the fact that we have strengthened management in Russia in multiple positions, multiple layers, and directed the whole organization towards focus on customers has been very helpful. You see, in this quarter, service revenues are growing, the customer base is growing, and this is the first time in Russia since the third quarter of 2013. We see also mobile data revenues up 20%, and we see churn being reduced by 10 percentage points year on year. All these data points, I think, are visible signs of things moving in the right direction for us in Russia. That being said, of course, there is a new reality in the country. When you look at the ruble to the dollar trading around 70 these days, unthinkable a year ago. And for that reason, we need also to look at our business in a slightly different way. The network sharing arrangement that we've done with MTS, I think is extremely helpful. I think it's an example of how we would like to work going forward in Russia with increased sharing arrangements to reduce the capital spending. I think also we need to take a hard look at our cost base and try to find ways of working more effectively and with less cost spent. And I think also, of course, using a variety of hedging instruments, securing our cash flows in dollars is important, and we have already put in place several actions on that front. So all in all, difficult environments, but clearly an improving trend in our performance during 2014.
Investment in high-speed data networks is a key part of your strategy. Is it having success?
I think we see an improving trend, as I've said a couple of times during 2014. I think one key driver behind this improved trend is the investment that we've been doing in our networks. So we will continue to do that. We're also trying to combine that with creating much more focus on customers and create a customer-centric organization. I think this is the future for our company. High-quality data networks compared with a passion to customer satisfaction and customer needs. In our base, only 57 million customers is on 3G and 4G. That's only 25% of the total customer base. I believe this gives us a lot of upside going forward, but that upside can only be captured if we have high quality networks and as a result of high investments in those networks.
Finally, turning to 2015, what are your expectations?
I think we need to expect continued geopolitical challenges. Generally, the macro environment in our markets will remain challenging. That being said, I think we have achieved many things over the last year or two. I think we've been able to build for the future. And I believe that our company is in better shape today than a year ago.